Well, we all know that investors don't like uncertainty, and let's be brutally honest. When we look out there today, it is impossible to assess what's going to be happening. And we think, often month to month or week to week, day to day. Right now, minute to minute, we don't know what's going on. And we can see this morning a very blatant example of that. First and foremost, of course, we have the tariff situation. That is a real gong show. We have inflation. There's threats that might be coming back. Interest rates, who knows what's going to be happening there. We have these geopolitical tensions that are still simmering all around the globe. And headlines, they're all over the map. You hear some of the talking heads say that just sit tight, we're heading for a soft landing. Others are saying that this is just the calm before the next big storm. And then meanwhile, you've got markets that are just all over the map and mostly crashing to the downside these days. So if you're feeling unsure about what to do, you're certainly not alone on that. And as someone who spent decades as an investment advisor working side by side with clients, I definitely have seen times like this before. Today, I want to just sort of offer a bit of a perspective and some real practical guidance for how to invest when the path ahead isn't clear. And first things first, the uncertainty is not new. It might feel sort of louder, more in our face today because we're living through it, but it's always been there. And the markets have never sort of moved in a straight line. There's always something to worry about. And that's one of the first things that I learned when I became an advisor back in the 90s, I guess, that there's always a reason that investors would say, I don't want to invest now because of this. And we think back to, the 80s, there was inflation. There was very high interest rates back then. Then in my era, in the 90s, we had that, the lead up to the tech bubble. We saw terrorism. We saw recessions in the 2000s. And then, of course, in 2008, that big global financial collapse. We had the pandemic. A lot of people will remember that in 2020. And now, let's just call it tariffs. That's really sort of what this is all about. But when you look back through all of this, the markets have always found a way to recover. And then after that, to actually grow. So I want to get one thing straight right from the get-go here. The most important message here is that you don't need to be able to predict what the market's going to do. But you do need to prepare for the uncertainty. And that is the foundation of putting in a successful investment plan over the long term. So the good news I want to share with you today is this. There are at least three things. I'm going to focus on those today that every investor can do and that you can control even in times like we're seeing today. Those things are your asset allocation. That's fully in your control. Your behavior hopefully is as well. And then you're having a plan is the third thing we're going to talk about today. So I'll break those down, and I want to start with the asset allocation. And this is your foundation. Now, a lot of people are in trouble today because they are too concentrated in one sector. They're taking more risk than they probably are comfortable with. They may have been comfortable a month ago, but they're learning today that they're not. And that is very, very common. This is why I say that a balanced, diversified portfolio, this is not always going to excite you as you go along the investment journey here, but it is the key here. It won't wreck you either. It sort of acts as your shock absorber when the road gets pretty bumpy, and you want to have that suspension system in place to help you through those times. Now, I get it. There are going to be critics who say that for the average man on the street, diversification is just stupid. You be you. If that's the way you feel, okay. But I know, having worked with people, real people, looking in their eyes across the table, that the concept of diversification is very valuable for very many people. Now, the second thing is your behavior. And most investing mistakes, the brutal truth, they don't come from the markets. They come from us. They come from the way that we react to the headlines, chasing the latest fad, selling in fear. Those are the types of things that hurt long-term results. And by the way, if you're not on the Blossom app, if you do want a community to support you through times like this, you can scan the QR code on your screen here. You can join our community. My username is Mark B, so you can look me up on there and sort of, just be able to share your feelings with the community. The truth of the matter here is the best advisors aren't the smartest. I like to think they are sometimes, but they're not. But without question, they are the most disciplined. That's what will get you through all of the noise. The best investors stick to the plan. In times like these, they sleep on things before they make any big decisions because emotion can be very, very expensive. We don't want to learn that the hard way. Now, the third thing that you can control is your plan. This is sort of your compass. And when the market gets messy, your plan will help keep you grounded. And when you have a proper plan in place, it should answer questions like, what are my goals? How much risk can I handle? Assess those in times like this, but also assess them in normal times so that when you get to times like this, you're not sort of second guessing yourself. What is your process for adding or reducing exposure? What will I do if the market drops? We're seeing that now. Or conversely, what if the market spikes and we are at all-time highs? What do you do then? I would say if you do not have a plan in place right now, you should take the time to build one. If you do have a plan in place, then review it. Because I always look at investing without a plan as not really being investing. That's more sort of guessing. And over the long term, that certainly doesn't work. Now, on that note, next week, I'm going to post a video on how to create your own investment policy statement. And this document is like the blueprint for building your investment strategies. When I worked with clients, it was mandatory that I created one of those for each and every client that I worked with. And I'm going to show you what I use today. I'll show you the actual document that I used when I was working with clients. If you are new to our channel here, go ahead and subscribe so you will get that when it comes live. Now, I do want to talk about something else, and this is the temptation to wait. And a lot of people right now are just saying that I'm going to wait until things calm down. But when has the market ever felt calm in real time? As I mentioned, there's always a reason that you want to wait. But the risk in that is that when the fog finally lifts, the markets tend to recover very, very fast. And we saw that this morning with a massive whipsaw action just on some fake news, as it turned out, of the administration pausing the tariffs. We saw a massive recovery. I think it was about a 7% swing in 20 minutes or somewhere along those lines. That will happen when we get that news coming out. And if you're entirely sitting on the sidelines, you're going to miss any kind of rally or any type of recovery. Now, very importantly here, that doesn't mean that you go all in. It means that you start moving thoughtfully. That's the key. You dollar cost average, you rebalance, you stay on schedule. And strategies like this can be pretty boring, but they're also very, very important. Remember, this video is about investing even when you don't know what's going to happen. And that actually requires a strategy. Now, a word on cash as well. Over the past few years, interest rates have been relatively high. And I say that because obviously they've been much higher in the past. But when we compare things over the last 30 years or so, what we could get for a term deposit in the last 2.5 years has been decent. And when we invest in cash, it feels comfortable, right? GICs, T-bills, money market funds. But there is a trap with this. You start to think, it's possible that you start to think that comfort is a strategy. Now, cash can be a tool, but it is not a long-term plan. Long-term, you need growth. I mean, most of us want to have that portfolio growth. And even in scary times like this, you need assets that work, even when they're sort of shaky out there. So this includes stocks, real estate, it includes bonds. Now, yes, I acknowledge they do carry a risk, but they also carry that return. So we have to be careful that we don't let the short-term comfort rob you of the long-term results. You should have an emergency fund to meet some short-term needs. But if you have too much cash just sitting idly, it can hurt you over the long term. Now, a distinct exception I will make to this is for retirees or people who are near retirees, if you're at that number that you need to be at. That certainly when we're going through times like this, it can feel very, very intense. You're not thinking, 30 years out. In many cases, you're sort of thinking in some cases next month or this coming year, where am I going to get my money from? So that is a very, very valid concern. But this is exactly why retirement planning does typically include a cash buffer. There's rules of thumb: 1 year, 2 years, 3 years of income. If you hold that in short-term instruments or cash, that is your buffer. It's your breathing room for times like this, so that you're not forced to sell at a loss just to fund your lifestyle. Now, if you already have that in place, trust it. Go with it there. That's why it's there. That's what it's for. If you don't, though, now's probably a pretty good time to adjust for that. You don't need to panic, but you do need to plan. Thank you so much for watching this video. Remember out there, stay grounded, stay focused on the big picture for the long term. We'll see you in the next video.